Okay, that looks good. Okay, so today we're going to be talking about the money channel, and we're going to probably start off in a direction that you may not really anticipate. Not that that's probably surprising to you by now. As you know, I really like throwing curveballs in this whole thing. But then we're going to get right to some of the charts. If you just bear with me here for a second, I want to make sure I've got everything set up correctly. For the charts section, there we go. Okay, and I will say this: I did send out an email with the the incorrect phone number and password. So if you would please keep the chatter to a minimum if you're on this particular line. If you're on the I don't even know what it's called, the presenter or the organizer passcode, just make sure you don't have a whole lot of noise in the background. Otherwise, everyone else won't be able to hear. If you are looking on the web, hopefully you can see the call-in number, which is here, 772-3434, access code 400-222-579. Okay, so let's go ahead and get started. So how much money does it take to make $200 to $300 per day? That is probably the number one question right now on most people's lips that are either emailing me or submitting tickets. And the one thing that I want to do is really just address this head on. I got an email from one of the members who said that I didn't really answer the question in the email that I sent out the other day, and it certainly isn't my intention to be cagey about things. It does take a little bit of explanation. So let's just dive right in here. How much money does it take to make $200 to $300 a day? The first thing I want to say is that this is not investment advice. It's meant for educational purposes only, and the information is believed to be accurate, but of course there's no guarantee that it is so, and any results are hypothetical. So, what is the problem as I see it? Well, the problem is we've been conditioned to believe that the amount of money we have in the account somehow reduces risk and makes trading somehow easier. In fact, if you talk, the government's definition of an accredited investor has only to do with the amount of money that they have. They have to have a certain amount of money in the bank, and they have to have a certain amount of money that they make every year. And all of a sudden, that person is dubbed, I dubbed the sir or lady accredited investor. And you know what? That's just a bunch of bull. I've got friends that make a lot of money, some of them in real estate, that I would tell you are not sophisticated when it comes to their money. They can make $500,000 a year without any problem in the real estate market, but they're losing $450,000 on their investments. What does this mean? Well, most people on the call would say this: if I only had $500,000 in an account, I could make a fortune. And you know what, guys and gals, that is just sadly not the case. And yes, it is even worse than you think. Let's talk about two particular cases. Amaranth Advisors' very recent hedge fund blow up. They were $9 billion hedge fund that lost $5 billion in 1 week. And I'm going to read this for you. This is from the Post-Gazette. I can provide the references for you if you need them. According to natural gas investors who traded alongside Amaranth, Mr. Hunter, who's the single trader who's responsible for this hedge fund blow-up, repeatedly used borrowed money to double down on his bets. In other words, he was adding money to a losing position, buying more futures contracts of the kind his fund already owned, supported their price by increasing demand. So in other words, he was buying so much of this, he was the one who was driving price up on himself. Remember how I was talking about professional traders have to buy when the market's going down? Well, here's why they have to do it. So